On October 10th, the crypto market didn't just dip, it completely fell off a cliff. We're talking about a financial firestorm that wasn't caused by some crazy hack or a network failure. Nope. This was all triggered by a single announcement from one of the most unpredictable people on the planet. So let's get into it and see what really happened. $19 billion. Just let that number sink in for a second. That's how much value was completely vaporized in a single 24-hour window. Look, this wasn't just a bad day at the office. This was the single largest liquidation event in the entire history of crypto, period. And you gotta remember, behind that massive number are people. 1.6 million of them, to be exact. That's over 1.6 million individual traders who had their positions forcibly closed, their capital just gone. The market was absolutely gripped by panic, fear, and total chaos, and it all happened in just a few hours. So the big question is, how on earth does something like this even happen? How does it spiral out of control so fast? Well, let's break down the anatomy of this shockwave. It all comes down to a brutal, systematic flush out of the entire market. Okay, now what's really fascinating here is how the pain was spread around. You see, Bitcoin dropped about 8%, Ethereum around 13%. That's bad, for sure. But the real carnage, the bloodbath, was in the altcoin market. We're talking assets like XRP and Solana getting hammered, down almost 25%. This wasn't a slow bleed. It was a domino effect, a total cascade. So what was the main culprit behind this cascade? It's one word: leverage. You know, the best way to think about leverage is like a financial magnifying glass. It's an incredible tool that can make your winning trades feel massive, but, and this is a huge but, it does the exact same thing to your losing trades. So just think about it like this. If you're using 10x leverage, a simple 10% price drop against you means your entire position gets wiped out. Boom, 100% loss. That's a forced liquidation. Now imagine millions of those happening all at once. It creates this waterfall of sell orders that just pushes prices down even further and faster. So what was the match that lit this whole fire? Well, it all leads back to one person, and it creates this fascinating paradox for the entire crypto industry. The question is Donald Trump crypto's biggest ally or its biggest saboteur? This right here, this is it. The trigger was a single post on Truth Social. It announced a potential, and I mean a whopping 100% tariff on Chinese imports. The mere threat of a new, intense trade war sent a shockwave of fear through global markets. And crypto, being what we call a risk-on asset that loves stability, it got dragged right down with them. And this just perfectly lays out the paradox, doesn't it? On one hand, you've got Trump the personality, who seems like a friend to crypto. He's accepting donations in crypto, he's publicly against a central bank digital currency, he's even got his own NFTs. But then you have Trump the president, whose America First policies create the exact kind of global instability and uncertainty that markets absolutely hate. He's both the potential hero and the villain of this story, all at the same time. But here's the thing. The price chart only tells you half the story. To really understand what was going on beneath the surface, we have to look at the on-chain data. And let me tell you, it reveals a completely different narrative. Right. So while the market was in a state of absolute fear and millions of smaller traders were dumping everything they had, what were the big players doing? What was the so-called smart money up to? The blockchain data is just incredible. It shows a classic story. While retail investors, what we call the shrimp, were panic selling for their lives, the institutional investors, the whales, wallets holding over 1,000 Bitcoin, were doing the exact opposite. They were accumulating. They were actively buying the dip from all the panicked sellers. And it gets better. Right after the crash, we saw a massive outflow of Bitcoin from exchanges. Now, this is a huge bullish signal. It suggests that these big buyers weren't just in it for a quick trade. They were moving their newly bought coins into private, cold storage wallets, which means they're planning on holding for the long term. And finally, check this out. The total supply of stablecoins, think USDT, USDC, it didn't shrink. This is so important. It means that when people sold, their money didn't actually leave the crypto ecosystem. It just moved to the sidelines, into cash, waiting for the right moment to jump back in. The smart money didn't see an ending. They saw an opportunity. So this whole event was basically a massive stress test for the market. It was painful, no doubt. But where does it leave us now? Well, based on the data, we can see 4 main paths forward from here. All right, path one is the optimistic one. The bull run kicks back into gear now that all the risky leverage has been flushed out. Path two is the pessimistic view. The geopolitical bear takes over and fears of a trade war keep pushing prices down. Path three is interesting. It's the great decoupling, where crypto finally gets mature enough to just ignore all this political noise. And path four, that's the volatility trap, where we get stuck in a messy, choppy market. A nightmare for traders, but maybe a paradise for long-term buyers. When you boil it all down, what this event really shows us is that the crypto market is walking a tightrope. On one side, you have these incredibly strong, bullish fundamentals, like institutional money pouring in. But on the other side, you have the immense gravity of global politics. This crash was probably the most painful lesson yet, that crypto is no longer an island. It's plugged into the real world.
And that brings us to the ultimate question. For you, in this new reality, what's your strategy? Are you buying this dip? Are you waiting on the sidelines with stablecoins ready to pounce? Or are you taking some risk off the table? How you answer that question is going to define the next chapter for your portfolio.